Buying a home is a significant step, and understanding your mortgage is key to making informed decisions. One phrase you will hear during this process is PITI, which stands for Principal, Interest, Taxes, and Insurance. These four components comprise your monthly mortgage payment and are crucial for budgeting and planning your finances as a homeowner. PITI is not just about monthly payments, it also affects how much you can borrow and the overall cost of your loan. Lenders look at these costs to determine if you can afford the loan you're applying for. As interest rates, property taxes, and insurance costs change over time, they can affect your monthly payments and the total amount you pay over the life of your loan. This video will explain PITI, break down its components, and show how they have changed over the years through graphs. Whether buying your first home or looking to understand your current mortgage better, this guide will provide clear and concise information to help you navigate the home buying process. Let's get started by breaking down the components of PITI, principal, interest, taxes, and insurance, to give you a clearer picture of what goes into your monthly mortgage payment and why each part matters. Principal. Principal is the amount of money you borrow to purchase your home. When you make a monthly mortgage payment, a portion goes toward reducing the principal, which means you're paying off the amount you owe on your home. Initially, a smaller portion of your payment goes toward the principal, but a larger portion will reduce the principal balance as you make payments over time. Interest. Interest is the cost of borrowing money, expressed as a percentage of the principal. The interest rate on your mortgage determines how much you'll pay in interest each month. At the start of your mortgage term, a significant portion of your monthly payment goes toward interest. However, as you pay down the principal, the interest portion of your payment decreases. Taxes. Local governments assess property taxes and contribute to public expenses like schools, roads, and emergency services. The amount you pay in property taxes can vary significantly depending on where you live. Lenders nearly always include property taxes in your monthly mortgage payment, holding the funds in an escrow account to pay the taxes on your behalf when they're due. Insurance. Two main types of insurance are included in the insurance portion of PITI: homeowners insurance and private mortgage insurance, PMI. Homeowners insurance protects your property against damage from things like fire, storms, and theft. If you put down less than 20% of the home's purchase price, your lender will typically require PMI, which protects the lender in case you default on your loan. How PITI affects your monthly payment. Understanding each component of PITI is crucial for budgeting for your home and planning your finances. Your monthly mortgage payment can change over time, especially if your property taxes or homeowners insurance premiums adjust. Knowing how each part of PITI contributes to your total mortgage payment helps you anticipate changes and manage your budget effectively. Next, we'll look at how each component has changed over the years and what that means for homebuyers today. If you are a long-time subscriber, then you know I often discuss real estate frequently asked questions and provide market graphs because informed buyers and sellers do better at closing than the people who do not properly prepare. If you're not a subscriber, please click the thumbs up like button and subscribe now so that you get all my new content when it is fresh. If you really want to know what's going on in housing, to see and hear the data explained, to evaluate the facts and ignore the hype that is so prevalent online, then subscribe now and I will keep you in the know. Let's explore how each component of PITI, principal, interest, taxes, and insurance, has changed over the years and the factors driving these changes. Understanding these trends can help our homebuyers anticipate future shifts in the housing market. Principal. The principal amount of a mortgage depends largely on home prices, which have seen significant fluctuations over the decades. Historically, average home prices have trended upwards, reflecting inflation, population growth, and changes in housing demand. This increase in home prices means that the principal component of mortgages has also grown, affecting the overall size of mortgage payments. Interest. Over the past several decades, interest rates have experienced dramatic shifts influenced by monetary policy, economic conditions, and inflation. For example, the early 1980s saw mortgage interest rates peak due to high inflation, dramatically increasing borrowing costs. Since then, rates have generally trended downward, reaching historic lows in recent years. These changes in interest rates have directly impacted monthly mortgage payments, with lower rates making borrowing more affordable. The 50-year trend of rates improving home affordability shifted dramatically 2 years ago, leading to taxes. Local government budgets and property values influence property taxes. As property values increase, tax assessments often rise, leading to higher property taxes. Over the years, many areas have seen a steady increase in property taxes, though the rate of increase can vary widely depending on the location. This variability affects the tax component of PITI, contributing to the overall change in mortgage payments. Insurance. The cost of homeowners insurance has also trended upward, driven by factors such as rising home values, increased frequency of natural disasters, and higher costs of repairs and construction. Private mortgage insurance (PMI) costs can vary based on the borrower's down payment and credit profile. As housing prices have increased, the amount financed has grown, potentially increasing PMI costs for those unable to make a 20% down payment. Analyzing the trends. The cumulative effect of these trends is an overall increase in the PITI payments for many homeowners. However, the impact can vary significantly based on location, timing of the home purchase, and the specific details of the mortgage product chosen. For prospective homebuyers, understanding these historical trends is crucial for making informed decisions about when to enter the housing market and what financial commitments they can expect. Next, we will present graphs illustrating these trends over time, visually representing how PITI components have changed and offering insights into the future of home mortgage payments. This graph shows the fluctuation of average mortgage interest rates from the 1970s to the present. Note two prominent spikes. On the far right, we observe that rates have doubled since 2021. Going back to 1981, we find that mortgage interest rates reached an all-time high of more than 18%. Despite today's rate staying below the 50-year average, its historic percentage change continues to shake the market. More important is the long-term trend from 1980 through 2021, during which rates consistently fell. Many overlook the significance of this trend, yet it promises to impact our economy significantly in the near and distant future. Over the past 50 years, the general decline in mortgage interest rates has built equity for homeowners. This equity turned into cash for purchasing goods and services, bolstering our economy. This downward trend halted in 2021, coinciding with substantial cash distributions from the federal government in response to COVID. The potential economic consequences of rising rates and the cessation of government handouts warrant serious concern. This graph demonstrates how property taxes and insurance have contributed to the PITI payments. It merges principal, interest, taxes, and insurance data to display the average PITI payment over time. Its value lies in its inclusivity. Whereas most reports on mortgage payments concentrate solely on the principal and interest, this graph reveals the impact of escalating taxes or insurance, which often go unnoticed. The black line, highlighted in yellow, shows that taxes and insurance have remained fairly steady. It's the principal and interest portion that is spiraling out of control today. Our final graph synthesizes all the information and incorporates inflation into the analysis. The red line tracks the PITI payments over 24 years, while the blue line adjusts these PITI payments for inflation, presenting all payments in 2024 dollars. Adjusting payments for inflation in terms of 2024 dollars is a method used to account for the change in purchasing power of money over time due to inflation. Wage inflation is when workers' average salary or wages in an economy increase over time. This means that a dollar today will not buy the same amount of goods or services or houses in the future. When adjusting inflation payments, we are essentially recalibrating the value of money to a common point in time, in this case 2024, to compare or analyze financial figures across different years accurately. These graphs illustrate past and present trends and serve as a tool for predicting future changes in the housing market. By understanding these patterns, homebuyers can make more informed decisions, potentially saving thousands of dollars over the lifetime of their mortgage. Next, we discuss the factors influencing changes in PITI and what prospective homebuyers can do to prepare for these expenses. Understanding the dynamics behind the changes in principal, interest, taxes, and insurance (PITI) is crucial for anyone looking to buy a home or manage their current mortgage effectively. Several key factors can influence these components, affecting overall mortgage payments. This section explores these factors and their impact on PITI economic factors. Inflation, soaring prices erode purchasing power, influencing interest rates and property values. As the cost of living increases, so can property taxes and insurance premiums, directly affecting the T&I components of PITI. Interest rates, the Federal Reserve sets short-term interest rates to manage economic growth. These rates influence mortgage rates, affecting the interest component of your mortgage. Economic conditions such as inflation and employment rates guide these adjustments. As we saw in the first graph, a sharp move in rates can significantly and immediately impact the rate of home sales. Housing market dynamics, supply and demand in the housing market can significantly impact home prices, the principal component. Higher demand in a seller's market leads to higher prices, increasing the principal portion of PITI. Policy changes, tax legislation, changes in property tax legislation at the local or state level can affect the amount homeowners are required to pay, impacting the taxes component of PITI. Currently, the state of Florida is exploring various options to eliminate property taxes for homeowners. However, it's important to note that the government will still need to find alternative methods to collect taxes to fund public services and infrastructure. This potential shift in tax policy could have wide-ranging effects on the real estate market, property values, and the overall financial burden on homeowners. Insurance regulations. State regulations can influence insurance costs by determining what insurance companies can cover and the rates they can charge. This affects the insurance component of PITI. Environmental factors. Natural disasters. Areas prone to natural disasters may see higher insurance premiums due to the increased risk. This can lead to a significant rise in the insurance component of PITI over time. Climate change. Long-term changes in climate significantly impact insurance costs and property values, particularly in regions increasingly susceptible to extreme weather events. With its extensive coastline on three sides, Florida stands at the forefront of areas vulnerable to the repercussions of climate change. This vulnerability necessitates a vigilant approach to monitoring both climate change developments and insurance rates. Preparing for changes. Prospective and current homeowners can take several steps to prepare for and potentially mitigate the impact of changes in PITI. Fixed-rate mortgages. Locking in a fixed-rate mortgage can protect against future interest rate increases, stabilizing the interest component of your PITI. Escrow accounts. Using an escrow account for taxes and insurance, as most lenders will require, can help spread these costs over the year, avoiding large lump sum payments. Energy efficiency improvements. Making your home more energy efficient can reduce utility costs and potentially lower homeowners' insurance premiums by making your home more resistant to certain types of damage. Regularly reviewing insurance. Shopping around for homeowners. Insurance and reassessing your coverage needs can ensure you're not overpaying for insurance. By understanding the factors influencing PITI and taking proactive steps, homeowners can better manage their monthly mortgage payments and plan for the future. In the next section, we'll explore the impact of PITI changes on homebuyers and strategies for managing these expenses. The components of PITI, principal, interest, taxes, and insurance, play a significant role in the overall affordability of a home. Changes in any of these components can directly impact homebuyers, influencing both the immediate affordability of a home and the long-term cost of home ownership. This section explores how rising PITI affects affordability and outlines strategies for prospective homebuyers to manage these expenses effectively. How rising PITI affects affordability. Increased monthly payments. As the components of PITI increase, monthly mortgage payments rise. This can stretch the budgets of homeowners, especially those with fixed or limited incomes. Higher qualification thresholds. Lenders use debt-to-income ratios to determine loan eligibility. As PITI payments increase, qualifying for a mortgage becomes more challenging for prospective buyers. Reduced buying power. Rising PITI payments mean that buyers might not be able to afford as much house as they could have when interest rates were lower, taxes were less, or insurance premiums were cheaper. This can force buyers to look in different areas or consider homes that might not meet all their criteria. Strategies for prospective home buyers to manage PITI expenses. Save for a larger down payment. A larger down payment reduces the principal amount of the loan, which can lower monthly payments and potentially eliminate the need for private mortgage insurance, PMI. Shop for competitive mortgage rates. Interest rates can vary significantly between lenders. Don't fall for the national lenders that spend a lot of money on advertising. Instead, ask your trusted real estate agent for a list of local lenders that they know will take great care of you at a highly competitive rate. Consider the total cost of homeownership. Beyond the listing price, consider how property taxes and insurance premiums affect your monthly payments. Some areas, even within a local municipality, have significantly higher taxes or insurance costs, impacting affordability. Budget for future increases. Property taxes and insurance premiums can increase over time. When calculating what you can afford, factor in potential increases to ensure you can manage future payments. Explore fixed-rate mortgages. A fixed-rate mortgage locks in your interest rate for the life of the loan, providing predictability in your monthly payments and protecting against future interest rate increases. Understand tax benefits. Some components of PITI, like mortgage interest and property taxes, may be tax deductible. Understanding these benefits can help you accurately assess the after-tax cost of homeownership. By employing these strategies, prospective homebuyers can better navigate the complexities of PITI and make informed decisions that align with their financial goals and capabilities. Managing these expenses effectively is key to securing a desirable and affordable home in the long term. As we look ahead, several factors suggest potential trends in the components of PITI that could affect future homebuyers. Interest rates. Economists predict that interest rates may fluctuate based on global economic conditions and central bank policies. Prospective homebuyers should stay informed about these trends, as even a small change in interest rates can significantly impact mortgage affordability. Active buyers should keep their local mortgage lender on speed dial and be prepared to lock in a rate when the lender thinks it appropriate. Property taxes. As municipalities adjust to changing economic realities and funding needs, property taxes may continue to rise in many areas. This trend underscores the importance of considering ongoing property tax obligations when purchasing a home. Insurance costs, hazard insurance premiums are soaring, especially in regions susceptible to natural disasters. While technological advancements in building materials may offset some expenses, the overarching trend indicates increased premiums. Homeowners and potential buyers must stay informed about flood zones and any factors that could contribute to higher monthly mortgage payments. Understanding the risks associated with a property and the potential for increased insurance costs is essential for financial planning and protecting one's investment in the face of evolving climate and market conditions. Principal amounts. With housing demand in many urban and suburban areas outpacing supply, the principal cost of homes may continue to rise. However, market corrections could occur, influenced by economic shifts, changes in work-from-home policies, and demographic trends. Active buyers and sellers should discuss supply and demand for comparable homes with their trusted real estate agent. Prospective homebuyers should consider these trends as they plan their home purchase. Staying informed and flexible, exploring various mortgage options, and working with experienced, five-star real estate professionals can help navigate the future housing market more effectively. Understanding the components of PITI, principal, interest, taxes, and insurance, is essential for anyone navigating the home buying process or managing a mortgage. This article has broken down each element of PITI, explored how they have changed over the years through graphical analysis, and discussed the factors influencing these changes. The goal has been to equip prospective homebuyers and current homeowners with the knowledge to make informed mortgage decisions. Key takeaways include principal and interest. These are directly affected by the home price and the mortgage interest rate at the time of purchase. While principal amounts have generally increased due to rising home prices, interest rates have fluctuated, influenced by broader economic policies and conditions. Taxes and insurance. Property taxes and insurance premiums have also trended upwards, driven by local government budgets, property values, and the increasing cost of repairs and construction. Environmental factors and policy changes further influence these components, impacting the overall cost of homeownership. Preparation and planning, partnering with a trusted real estate agent and mortgage lender who offer comprehensive research and budgeting assistance can be invaluable. Such professionals can help navigate the complexities of the housing market, identify potential cost-saving opportunities, and offer advice tailored to managing costs more effectively. The journey to homeownership is filled with important financial decisions for prospective homebuyers. A clear understanding of PITI is crucial for budgeting correctly, avoiding unexpected expenses, and choosing the right time to enter the market. For current homeowners, knowledge of these components can aid in decision-making about refinancing, selling, or adjusting household budgets to accommodate changes in mortgage payments. Whether you are buying your first home or looking to understand better your current mortgage, a comprehensive grasp of PITI and its influencing factors is invaluable. It helps make informed decisions and plan for a secure financial future in homeownership. If you want to see a video featuring my 9 tips for buying a home in a highly competitive market, you can view it by clicking on the box on the left side of your screen. To see a popular video featuring my top 6 home selling tips, just click on the box at the right. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.